All right, so in this section of our modules for, kind of the classroom here in school, I wanted to kind of break down before I getting into which we call the habit, the assemble, acquire, leverage, and multiply. I want to take a step back and kind of go over the details of why commercial real estate is different than residential, but most importantly, why it's better. And so I apologize that I'm not the most sophisticated when it comes to sharing my screen. I'm not using a slideshow or anything. But again, I just want to go over the differences. And so one thing that you can do, if I haven't sent it to you already, it's download or even purchase the book online. It's called Commercial Real Estate Investing by a guy named Dolph DeRoos. And I'll probably be sharing that a lot in all of our calls and talking about why that book is so impactful when it comes to thinking differently about real estate. But again, I want to just break down quickly the differences between residential property and then commercial property. Mix in a little bit of back and forth here too as we follow along, so you can kind of discover, for yourself why residential is just way, way less than subpar than commercial. So going into the basics of commercial real estate. So what is it, right? Number one, commercial real estate, and I'm not going to bore you with a slideshow, but it's going to be kind of a dialogue of conversation, but I just want to walk you through it. So, of course, commercial real estate is where commerce is conducted. Residential is where people live. So when you go down to a shopping center and you trade in your gold jewelry at the pawn shop, or you go and buy drugs at the pharmacy, or you go and trade in your cell phone at the Verizon store, you're doing business in those locations. Therefore, that is what is commercial real estate, okay? If you happen to go and this is where I think it's a little choppy sometimes, is people talk about multifamily or apartment being commercial real estate. Now, I won't get into the weeds because that's not the point today, but maybe you can get some commercial loans. But the point is that you have tenants that are individuals or single people living in your space. Therefore, it's residential property. I always kind of joke, and you've probably heard me say it, but commercial real estate is different because you've got business owners as your tenants, and in single families and in apartment buildings, you have Red Lobster waiters as your tenants. That's the biggest difference, okay? So again, people versus contracts. So I'm not going to walk through all this, but I just really want to make sure that you comprehend the differences before we start talking about underwriting and then inevitably buying these buildings. So when you're, when you're buying these single family rental toilet, and a toilet's leaking, who's on call, right? Well, we'll get into the lease here in a second, but with commercial real estate, you're never getting a call for a toilet running. Nobody's ever, the tenant is responsible for maintaining their space, versus when you have a single family home tenant or an apartment unit tenant and something goes wrong with the property, they're immediately calling the super, or they're calling the landlord, or they're calling the property manager, because they have a mentality of not being responsible for something. Where on the other hand, when you've got business owner tenants or entrepreneurs that are in your space, they just handle everything themselves. So the tenant is responsible for all property management. And again, I go on, but again, in the lease with triple net leases, we'll explain this, but the tenant is responsible for all the maintenance. And where you have residential tenants or residential leases, those are gross leases. So think about it this way, and we'll get into this, but a gross lease has gross income, you pay all the expenses, and then you net. In triple net leases, your gross income, there's no expenses, so that's your net income. So moving forward here, if a residential tenant doesn't pay rent, you've got limited options. In commercial real estate, if a tenant is delinquent, you have the right to disdain for rent. Believe this or not, I'm going through a situation now where we just signed this tenant up back in October, and he personally guaranteed, now this is already into the weeds, but this is what you're here for. So I got this tenant that signed up, security deposit. He's paid me 2 months of rent already. Solid tenant, great lease, 5-year lease, triple net, rents increase 3% every single year. But he calls me and says, "Hey, I didn't comprehend, the ebbs and flows of the winter times versus the summer times in my business." And I'm like, "Look, dude, I hate to hear this, but I just don't care, right? You signed this lease with me, and it has a personal guarantee in it, meaning that if he, for whatever reason, can't pay me rent, he's still on the hook. We can take his garnish wages, do the whole song and dance to be able to collect that rent." And another step on top of that I just recently learned from my leasing agent is when you go and lease, when he rents that space from you and he does not, again, pay rent on time. And let's say I've got the building rented at $9 a square foot, okay? And we go and find a new tenant, to come in and rent from behind him, but he's only renting for $6 a square foot. The previous owner is still on the hook for that remaining $3 discrepancy, which is pretty crazy. But also, too, if I got to go call an attorney to go and, remove you because of your default and I got to evict you, the tenant actually pays the attorney fees. So what I'm getting at is in residential, you don't have a whole lot of recourse if someone doesn't pay you. In commercial, you can write them a written notice, whether it's through email or letter, and in 2 days you can go and change the locks and sell their equipment in order to collect rent. It's pretty ridiculous the amount of recourse that you have in commercial leases versus residential leases, okay? Let's go on. So why should you invest in commercial real estate? Okay, this is a question that I'll ask you. Does a tenant's business have more or less value with a short-term lease, and why? Any idea? Well, think about it. Because commercial tenants earn their income on your property, it's a benefit called goodwill, okay? Because of goodwill, tenants fear landlords won't renew their lease, so they are inclined to ask for longer leases. If they're investing in the building, they want the security of a long lease. In commercial real estate, it is in the interest of both the tenant and the landlord to have longer-term leases rather than shorter. So let's start back from the beginning here. So what is goodwill? So imagine that you have a tenant. Let's say you own a building and it's 5,000 square feet and you've got a dentist office in there, right? You've got Dr. Smith, who's, the only time he makes money is when his hands are in someone's mouth. Well, Dr. Smith, let's say he has a 5-year lease on his building that you own, okay? Number one, I think this is the biggest difference, again, is when you have a single family tenant, they don't care about the property because they know they don't own it, right? They don't care. They know that they have the opportunity to leave here in a couple of months, most likely, and trash it, and they're fine with it. On the other hand, with Dr. Smith in the dentist office or, any other business owner, right? They're fabricating steel, they're supplying glass, they're distributing whatever it is, right? It doesn't matter but they're a business owner and they have clients coming and going. They are going to make sure that the shrubs and the bushes, they're taken care of, the hedges look good, the paint of the building looks solid, the lighting looks nice outside. They're going to make sure that their building is welcoming and inviting because they earn their income on your premises, like on your building. So most importantly, they're going to take care of the property because that's where they earn their income. That's where they earn their livelihood. That's how they put food on the table for their family. But also the goodwill of their clientele. Like going back to Dr. Smith, if for whatever reason that I, as the landlord, decide to say, hey, Mr. Smith, your lease is up. Sorry, got to kick you out. And he's got to go across town. If he had 1,000 clients, imagine, 1,000 clients as a dentist probably isn't a lot or a little. But what happens to him if he has to go and move across town? He's most likely going to lose maybe half of his clients because let's say that if someone's on Smith Street and the next street over is Jefferson Street, and then now he has to move 4 miles across the city, all of his clients that are in this little bubble, in this little circle, are going to say, well, who am I going to go to now? Probably whoever is the most convenient. So what you've discovered is that these tenants truly value a long-term lease versus a shorter because they want to make sure that they are providing, the services to their clients, and they don't want to move around because they're going to end up losing income that way. So they're more likely to ask for a longer-term lease. And so, like I said, they're investing in the building. They want security for a long lease. So again, most people, you think you want short-term because you want agility, you want to be able to move. Maybe some residential people think that way, but because these business owners are in business for the long term, they're playing the long game, they are more than likely, and all of my tenants have the same way, they want to have long-term leases. They don't want to get out of it because, and not to mention too, I'll remember if I go into this, but when you have a long-term lease and a tenant has the ability to forecast their expenses out into the future for 60 months, maybe even longer, it allows them to become more efficient in their business. So if you think about it from a perspective, if you knew what your cost of goods were going to be, if you ran a business and you knew what your cost of goods was going to be in 5 years from now, think about that. You knew that you could forecast down to the dollar how much it was going to cost you to run your business. you would be able to be more effective with your decision making today versus maybe in 12 months, the price of your fixed cost of rent was $10,000 this month, and then in 12 more months, it could be $15,000. It's not going to allow you to be as efficient with your decision making if you don't know what your fixed cost is going to be in your business. So that's why these tenants want longer term leases. So like I said, it is in the interest of both the tenant and the landlord because, again, the tenant can forecast out their expenses very, years into the future. And for me as the landlord and my banker, my tenant's going to pay me rent on time, and I'm going to have, passive income, and my banker's going to be thrilled with that because he knows I'm going to be able to service debt. Okay. So another question. In residential, if you approve your tenant to sublease and your new tenant defaults on their lease, can you go back on the previous tenant? Why not? Why can't you do that? If you had a guy that's owning you have a single family home in a cul-de-sac, and for whatever reason, the guy has to move to San Francisco because he just got a new job, and that guy subleases the property, and let's say in 6 months that guy stops paying, are you able to go back to the guy in San Francisco? No, that guy's long gone. You got no chance of going and serving that guy. In commercial real estate, on the other hand, you have that opportunity to, there's a thing called an assignment of lease clause. And what that just simply means is that the more levels, anytime a guy sells a business or leaves and goes somewhere else, like I mentioned a minute ago, what that's going to actually do is protect you, gives you another layer of protection that the rent's going to get paid. So you read this here, but if a tenant sells his business, the sale must first be approved by me, which is awesome because, again, what if this guy was to sell his, he's like, hey, I just want to get out. I want to move. I want to go to Alaska, whatever his situation is. And he just sells his business for $2 and leaves. Well, the fact is that it puts me in a spot. So I'm not, if I don't believe that he's selling it to somebody that's competent, that can pay rent and, run the business as efficiently as the previous owner, I'm not going to approve that. So also I have to consent to the buyer taking over the position of the sellers, but still hold the sellers liable in case the buyer defaults on the obligation under the initial lease. So here's what it says, without this clause, the tenant could simply sell his, okay, I'm kind of talking before myself here too. I haven't looked at this slide here in like a month, so I apologize. So sells his business for anyone for $1 and can walk away. So when the seller of a business knows that he is effectively underwriting a new business until the lease expires, he has a vested interest in finding a buyer who can run his business profitably, knowing that he is still on the hook. So again, it gives the owner of the business a little bit of skin in the game because he knows he just can't walk away because he's going to be on the litigation side at that point if he doesn't pay me rent on time. Or most importantly, if his new buyer of his business doesn't pay me on time. So really, the assignment of lease clause, and I'll be candid, I'm in this situation right now, like I just said, with a guy where we got an attorney hitting this guy up. I'm not really worried about it because we've already got some other potential tenants. But the assignment of lease clause is a big one because it truly puts this guy on the hook. He's personally guaranteeing this assignment of lease. So if for whatever reason this guy ends up, unless he gets abducted by aliens and I can't serve him, those bills are going to pile up for attorney fees. And then eventually, it could get criminal, right? Right now it'd be a civil case, but there could be a point down the road where if he doesn't pay for the back lease, the back rent, and then he doesn't pay, the attorney fee, it could literally turn into a criminal offense, and that could really ding him from being able to run business and, most importantly, lease another space into the future. Okay. Do commercial tenants prefer to pay property taxes, insurance, and maintain their building? Why? I would ask you. Does commercial tenants, do they prefer to have a triple net lease or do they prefer to have a gross lease? Well, triple net leases mean that the quoted rent is net of 3 items. So property taxes, insurance premiums, and maintenance, okay? So what this means is that the reason why tenants prefer more so than not to have their building as a triple net lease, I kind of mentioned it a second ago, talking about being able to forecast their expenses into the future. That's a big deal to a lot of business owners. So let me take a step back and explain this. So if you've got a business owner, let's say you've got a 10,000 square foot warehouse, and you've got a business owner that's fabricating steel, and he's bringing in $4 million a year in gross revenue, okay? He's not a mom and pop business. This guy is not just going out there and hoping and praying that the business runs, and he's got a relationship with the credit union, and he's got to have an extended line of credit. Like, that's not the business he's running. He's running a successful 7-figure business, okay? These business owners understand the difference between a variable cost and a fixed cost. Variable costs are things like your cost of goods, your sales commissions to your sales team, maybe fuel that goes into your gasoline tank, anything that can be variable, right? It's kind of comical to say, but like anything that can change. Where your fixed cost might be your administration fees, maybe some type of memberships or subscription services, like maybe a software or some type of website or anything like that. I think of like a Zoom, right? That's $20, but that's a monthly fixed cost that just is reoccurring. But the biggest piece to that fixed cost metric is rent. It's not in a variable cost. It's in a fixed cost position on their balance sheet. They know they pay it every single month. So what I'm saying is when these business owners know that they can forecast, again, their fixed cost for 60 months into the future or even further, it allows them to be way more efficient with their decision making. So again, if they had this fixed cost versus these variable costs, they don't know what's going to happen here, but they know what this is going to happen. It's going to allow them, again, to just be efficient. So they prefer to have these triple net leases because it allows me to lower my gross rent, because again, like I mentioned a second ago, gross rent on a single family home is up here. Then I pay taxes, insurance, I maintain the property, and I even pay my mortgage out underneath that. And whatever's left over is my little profit margin. It's my little cash flow. Versus on the other side, I can actually suppress my gross amount of rent per month on these buildings, and just a little bit, and then charge back the taxes and insurance and the maintenance to the tenant. And they know that they're paying this amount per month every month. And I can't raise the rents on them just because the market has changed. We're in a fixed contract together. So the reason why too, you can see, is they have direct control over the cost. So they can, I haven't had any tenants that have gone and I would say like gone to the city and distributed or said, hey, I don't think this building that I'm leasing is this much taxes, or they haven't done that. But I think that a lot of tenants, maybe with the insurance side, they figure, okay, what actually do I need in coverage? And then they can go and do it. Then most of the time, though, I haven't experienced, again, everyone's different, but I personally haven't experienced a tenant where they're going and actually, saying that these are wrong. They just say, hey, let me know what I owe you. I'm the one that actually services up the insurance, and then I just get reimbursed pro rata. So they pay me every month. So these triple nets allow the tenant to have total control over the building. It's where they earn their income, so they want to be in charge of the upkeep versus the landlord. So again, to go back to that Dr. Smith example of that dentist, imagine if that was a gross lease and I was in charge of maintaining the building. You might have had this a couple times in your own single-family houses where you probably don't care. You care a little bit. You want to mow the yard and trim the bushes, things like that. But imagine in this situation where this guy's earning all of his income on this space, and me, if I'm a landlord that lives out of state and I don't pay for any of the upkeep of the building, imagine how bad that's going to look if you are going to go get your teeth cleaned, you're going to get a crown removed or something, and you show up to this place that's like completely overgrown. The brick hasn't been power washed in 20 years. The windows are stained. Like, imagine how you would feel like a little icky if like this landlord if you walked into a building to have like something with your mouth fixed. Like, to think about that. And so that just is a bad move for this Dr. Smith to have the landlord pay for all that and keep all that up. So it actually makes more sense for the tenant to pay for that upkeep and to do all that stuff. In exchange for that, I'll give him a little bit of a lower base rent, okay? So again, you can see at the bottom, the biggest difference here is the tenant is in control, not the landlord, okay? So again, the tenant earns your income on your property. I know we've been kind of talking about this, but it really is an important fee or aspect. So if something stops working here, a commercial real estate tenant is not going to call you. They're busy running a business and they don't have time to coordinate with you to get it fixed, okay? On residential side, you've probably experienced it if you own any single families. Like, a tenant views themselves as a victim. You're the greedy landlord. You're the mustache guy from the Monopoly game. Like, they're going to go out of their way to call you and you fix it because you're the rich guy. It's not fair. The world is out to get me. You know, that same song and dance we've all experienced, you know, versus again, I just think of my own tenants that are just business owners. They're like, why the heck would I call Nolan and try and get him to coordinate this and go back and forth when let me just do it? I mean, it's almost common sense. Like, a business owner is an entrepreneur. They're a go-getter. They're attacking business. And the last thing that they want to do is call their landlord who might be skiing or might be at the beach and doesn't really care because we have a contract. And we're not going to make that a priority for their business. So versus the residential side, those tenants just look at you as the bad guy. You're the greedy landlord. So again, and at the bottom here, the tenant is always finding a way to enhance your building so that they can increase your income, you know, and increase their income. So when an improvement happens, it requires your permission, but not your funding, which is another thing. I've got a building right now where I went and built this whole space out for this tenant. It's a great lease. I mean, 7 years, triple net, you know, awesome lease. But these guys were asking me to go and improve, and I'll probably get to it actually. Yeah, I'll get to it in a second, but I'll tell you the story. So basically I bought this building, had to, you know, gut it, do the whole song and dance to it. But what happened next was they were asking me, that was not in the agreement. They asked me to go in and to put brand new roll-up doors into the space. And I was like, look, guys, I'm not doing that. Like they called their attorney, you know, and I was like, look, I'm not doing this. And if you want to get out of your lease now, that's fine. You owe me $75,000, which was their buyout. And they ended up not doing it. But what I'm getting at, though, is that they ended up buying their own roll-up doors, like these nice, fancy roll-up doors that they wanted to have, because to them that was important. And what I'm getting at is they asked me my permission to put new roll-up doors, and I gave it to them because I want them to be happy in their space. But they paid for it. Like, they were improving my building with their money. So because they want to earn their income on my property. That's what makes it kind of cool. When was the last time you had somebody in your residential property improve anything of yours? I mean, it's comical to say, you know. All right. If a tenant requests an improvement, should you agree to finance the improvement, and why? I'd ask you. Let's find out. So if a tenant requests an improvement and the landlord agrees to finance the improvement, the tenant will pay X% of rent for the cost of the improvement. So if any time that a tenant asks me to do something, and again, I'm not talking necessarily about that other deal with the garage doors, but if someone says, hey, I would like to have a new 10,000 square foot build into this space, and it's going to cost $200,000, right? Or whatever the math is, $100,000 or $500,000, whatever. Initially, you're probably thinking off the hook, why the heck would I do that? But let's look and just describe why somebody would accept this deal. Why would the landlord accept it, and why would the tenant accept this? Well, number one, the tenant wants to do this deal because they don't have to come out of pocket immediately for the improvement, right? They can increase the revenue with the improvement. The landlord I increase my cash flow, and the building's capital value increases. So what I'm getting at is, let's say if you got a 10,000 square foot building and this tenant says, hey, I would really like to have 5,000 feet of office. Can you build this out? And let's say it costs $50,000, right? Or whatever it is. I don't know the cost of poker right now, but $50,000. And the tenant says, will you go in and build this out? And I say, sure, I'll build out this $50,000, but I'm going to charge it back into the lease and at 12% interest or whatever. The tenant loves this opportunity because they're not out of pocket $50,000. I'm out of pocket $50,000. Well, I'm going to go borrow it, but I'm out of pocket $50,000. The tenant now has the opportunity to increase their revenue from that improvement in the real estate. Okay, they're going to go hopefully increase their margins by at least 12% because that's what they're paying me. So they're happy with it. I've improved the real estate. So go to the bottom here. I've improved my equity because I've made the value of the space better. The cash flow goes up because the tenant's now paying me more money. The collateral improves because, again, the real estate is better. The tax write-off, I can use depreciation against my new and improved real estate. And all the while, my tenant's more likely to stay because I just spent a bunch of money on that space specifically for their business. So at the end of the day, it ends up being a very beneficial way to create a better relationship with your tenant and increase your cash flow, your equity, and the depreciation deduction on your space. Certainty of collecting rent. I think this is another one. So again, if you're playing the single family game, you've discovered how difficult it is, especially if you got a property manager or somebody like that. It can be unpredictable. Like I said, collecting rent from residential tenants can be unpredictable. If you've owned single family, you've heard every excuse in the book. My favorite excuse, I'd like to hear yours sometime. My favorite excuse was my grandma had COVID. That's why I can't pay rent on time this week or this month. And so I'm just like, wow, John, that was a good one. I'll give you another week because I had not heard that one yet. So that's probably my favorite. I'm sure you have a favorite too. But for commercial tenants, they don't sign their personal name to pay rent. So they use their business name. Their business is what's actually occupying the space. Of course, they personally guarantee the lease. So if some way or another, they get abducted by aliens, I get to go after their personal assets to collect rent. So it's a really watertight lease. And again, that it increases my certainty of collecting rent because that person knows that if their business doesn't pay rent, then they're personally on the hook. So like I mentioned a minute ago, guys, the tenant understands that the rent is a fixed operating cost. It's just a part of doing business. They don't have any issue with that because, again, to distill that idea down early to further is if they had a building, and this is a good key here. If they own a building or they were to lease, they were to have the same building, they were in 10,000 square feet, and they were renting it from me for $10,000 a month or whatever the number is, right? $10,000 a month, and they rented this space, and they come to me and say, "Well, I think rent's too high. I think I've had this happen to me before. I think I don't know, Nolan, rent." And I'm like, "Nope, John, no problem. Buy the building from me. Just buy it from me. Then you can actually pay the mortgage. You can pay the interest on that. You can take care of the taxes and the insurance. Like you do that, and it'll actually be cheaper. Like you'll save yourself $2,000 a month. It'll be cheaper for you to run this business out of this building when you are the one that's owning the real estate. You're the owner occupant." And what I ended up discovering is that the tenant just agrees, and they almost have an epiphany, and they're like, "Nolan, honestly, you're right. I'm in the steel fabrication business. I am in the glass supply business. I'm not in the real estate business. If I wanted to be in real estate, I'd be in real estate. But these guys are in their own business that their entrepreneurship is in. Where I'm in the real estate business. And that's why we're such a good team, is because I provide them a great building to run their business out of. They go out there and earn a living, and then they pay me rent to rent my space. Because again, I'm the one taking really on the risk by borrowing the money and personally guaranteeing the debt. Sure, they're personally guaranteeing the lease, but at the end of the day, it's a really good relationship because these tenants realize that they are not in the real estate business. They're in whatever entrepreneurship that they're in. So then they again discover that if they weren't paying rent, they'd be paying principal and interest to a bank. And so they discover that rent it's a lot better for their business because they don't have to tango on two separate business ventures versus just one. So, and then another key feature I'm sure you guys are aware of is you probably had residential tenants that, pay with cash, or they show up with an envelope with hundreds of dollars in it, and, you got to go deposit it in the bank, whatever. None of my tenants pay me like that. They all pay me with ACH. It's auto drafted every single month. And then think about it. The rent comes in, the ACH hits on the 2nd, my debt services go out on the 5th. And then if I have limited partners on a building, those go out on the 10th. I don't have to do anything. I spend about 15 minutes a month doing the accounting just to make sure everything hits, and then supervising the banks to make sure that the banks and the software did its job to draft and then to draft, So this is a good quote that I kind of like. With residential, multiple things have to go right for you to receive rent. And then with commercial, multiple things have to go wrong for you not to receive rent. That's the biggest discrepancy and the biggest difference that I've discovered. So, okay. Do rent bumps favor the landlord or the tenant? When I'm talking about rent bumps, I'm talking about rental increase, like 3% rent increases or rent reviews. Which one do you think that they favor, the landlord or the tenant? Trick question. You may think this clause is favored by the landlord, but it's actually beneficial to both parties. It enables the landlord, and I've kind of mentioned this already. I don't mean to talk forward like that, but it enables the landlord to offer a lower base rent than they would have otherwise been able to if they had to build a buffer should the rents decline or have volatility. And the rent bumps ensure stability and predictability in the market. So to go back, I've got a couple buildings. So I've got, 9 buildings right now that are all triple net, and I've got one building that's a gross lease. So right now, the 9 buildings on triple nets, those buildings, again, like I said, they can predict out into the future. The gross lease, on the other hand, they're susceptible to the marketplace. So they're actually in a really good area. If you're familiar with Birmingham, I got this building over in Trussville, Alabama. It's like northeast Birmingham. And they're on a triple net lease, or they're on a full service lease, meaning that, well, it's a gross lease, modified, meaning like they pay the utilities, but I pay the taxes and the insurance. But the biggest reason why that they're probably more in a bad spot than the triple net lease real tenants are is because when those triple net tenants, they got the runway. If my gross lease tenants, let's say they build an apartment building across the street, or there's like a big development goes on and the market goes from $10 a foot to $16 a foot because that's what the market space is, or the marketplace can get. Who's to say that I just can't go and increase the rent to $16 a foot because that's what the market is saying? Versus with triple net leases, I'm in a contract with these guys. They know where they're going to be. I can't just increase the rents because I'm in a contract. These guys, on the other hand, I'm on a shorter term lease. These guys are on like 2.5-year leases, all on gross leases. So for me, I look at this as an upside because I can increase the rents if the market goes up. But for them, it allows them to be able to get out if they wanted. I kind of like the gross lease in that area because I'm seeing rents trend upward. So neither here nor there. But what I'm getting at, though, is I can increase their rents just because I want to. That's kind of the biggest kicker with gross leases. And the tenants that are in there, they just have to wear it, or they got to go find somewhere else to park their business. It's kind of that catch-22. So if they want to go find somewhere else to stay, no problem. I'll lease their space up at the higher market rent. It's just a kind of a catch-22 on the gross side and the triple net lease side. But again, the rental increases in the rents, it just allows to have some predictability and their ability to stay consistent into the future and stability. Okay. An entrepreneur rents both his house and his office. This month, he only has the funds to pay one landlord. Who does he pay? His residential landlord or his commercial landlord? I'd ask you. Oops. Let me go back. Well, I would say, now I could be wrong here, but put yourself in this guy's shoes for a second. If you had a business where you put food on the table at your job, at your building, and you, for whatever reason, couldn't make rent, I would say that I would rather pay my building's rent than my own landlord rent or my own residential rent, because I know that there's a lot more government interference and involvement in residential than commercial is. So I think it's kind of funny to say, but it's probably because there's more tenant voters than landlord voters in the election. That's probably why there's a lot more interference with landlord or with tenants for residential spaces. But think about it. You could probably stretch out what I was mentioning before with like all these clauses in the leases. You could probably stretch out for another 3 months in your residential property before having to pay that landlord. Versus if you got me as a landlord and you don't pay me within 10 days, I'm changing your locks and I'm suing you for backed rent for default. And then you're still on the hook and you got to pay the attorney fees. It's a lot different lease than in a lot more, I'd say, recourse if you don't pay your commercial landlord than if you did your residential landlord. So I would say this, most likely than not, I bet you that guy's going to pay his commercial tenant or his commercial landlord before his residential landlord. So if you got thoughts or questions, mark them down. Of course, put them in our forum. I think that's the last one. We're going to go into underwriting deals on the next module here pretty soon. But again, just really excited to have you. Again, you've got my cell phone already, so shoot me a text if you got something else that's on your mind. We can chop it up. But go to the next module now and start learning about how we underwrite deals and using our pro forma. All right, see you then. Thanks.